You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, the 11th day of December, 2020. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. This will register you in about 30 seconds, and you won't ever have to register again. What will happen is you'll get an email right before the show starts. You click the link in the email and you join with one-click access. That also gives you access to the chat box so that you can ask questions and participate in the discussion. Of course, there will be days that you're out of the office, away from the desktop. Not to worry. Point any internet connected browser to cfrn.net/live. There you'll find a live, real-time simulcast of the show. You just won't have access to the chat box. We also stream live on YouTube and sometimes Facebook and Twitter during this broadcast. So, let us open with a word of prayer. Heavenly Father, we thank you for your blessings, for your mercy, for your grace. We offer salutations and respect to all present for this broadcast, and to all who will be affected by it after the fact. We brush off the chairs on which we sit to make a clear space for a meeting of the minds. We brush off from our clothing any debris picked up on the way to clear our minds of extraneous matters. We wipe the blood from our hands to acknowledge and apologize for any hurt we've inflicted. We wipe the tears from our eyes to acknowledge and forgive any hurt we have received. We take the lump out of our throats to let go of any sadness or disappointment. We take the tightness out of our chest to let go of any fear or resentment. We acknowledge your presence here today. We pray for your guidance by the power of the Holy Spirit. In Jesus' name we pray. Amen. Happy Friday. Okay. Let me give you the numbers from around the world. These are the cash markets, the indices as they're called. Currently the Dow down 107 points. NASDAQ down 104. S&P 500 down 25. Let me refresh that data one more time. Yep, true story. Dow down 109, NASDAQ down 105, S&P down 26, Russell 2000 down 16. No movers and no shakers. In the commodity basket, crude oil down 21 cents, trading 46.57 last. Gold up $8.90, trading 18.4630 last. And silver up 3 cents, trading 24.12 last. In the Asian markets at the close, Nikkei dropped 103 points, Shanghai fell 26, Hang Seng gained 95. No movers, no shakers. And in the European markets at the close, FTSE down 53, DAX down 181, the CAC down 42. And the DAX down 181, that's a drop of a little over 1.25%. So around the globe, we got one mover, one shaker. We have a mixed day in Asia, a red day in the UK. So far, big red radio Friday here in the US of A. Let's go to Michael and get a recap of what happened in the live training room this morning. Then I'll be back. We'll talk about the concierge alerts, the logic alerts, and we'll touch down on a few of the topics we talked about in last night's members only workshop. And we talked about, I'll show you when I come back. Michael, got you locked and loaded.
Okay, I'm ready to go. Now, before I get started, Jade and I, we were talking, and I said this during the morning session, but I know some of you guys weren't in the morning session. And I don't know if we're streaming right now, but I really want this to go out onto YouTube.
We be streaming.
Excellent. What we were talking about is, you know, the older generation that's getting this COVID stuff, then they get locked up in a hospital room and they can't have any family, and they end up dying alone.
Yes.
So what we want to do is make people understand that when you're not contagious anymore, you know, you can let your family in, you know, and now they're saying you're only contagious for 7 days, not 14. And so we want to start something. We were talking about it last night, and so I said I would start it today by talking about it right now, and I talked about it this morning. So you know, I told her to type up an email, and we can send an email out to all our people.
About the change in the number of days that.
Yeah, the change in the number of days, and just, you know, if the seniors or anybody really that's really got COVID bad and their body's not handling it, you know, they should, and people can put a mask on, and they should be able to go in and see them, you know, just to see them.
Yeah, my sister-in-law's in the hospital right now. She's got it pretty bad, and they're not allowing any visitors in.
Yeah, see, so if something really goes wrong with your sister-in-law, you know, what are you going to do, FaceTime?
Yeah, she does have her phone, and that's that's how a lot of people sadly have said goodbye. Especially and older people who don't even have a smartphone.
Yeah, I don't even have
the
I don't have a
nurses,
smartphone.
the nurses and the aides in the nursing homes would like bring their phone over and allow them to FaceTime with their family and say goodbye. What a sad way to have to do it.
So it's sad that this is where we're at with this thing.
Yeah.
But I think the healthcare workers, you know, I understand why they're doing it. But if somebody's on their last, you know, last couple hours of life, you know, and they want a family member, they should be able to do that. Anyway, let me get into this.
All right.
Okay.
It's all yours.
If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today we made 13 ticks in crude, 15 ticks in gold. Took us 13 minutes and one trade to get to the goal for the day. And at that point, we're up $100 a contract, and we hit 280. On the month now, we're at 2901. That's over 8 days, averaging $362 per contract per 2-hour trading day. We are now on our 205th consecutive day of getting the goal. And on the year, we're at 98,204. That's over 230 trading days, averaging $426 per contract per trading day. A 2-hour trading day. Not the whole trading day. If you have not taken a free trial with us and you want to take a free trial with us, go to the homepage here at CFRN.net. Right here it says free 5-day trial. Click on that, and it'll bring you here to eminitrainingschool.com. All we ask for on this page is your name, email, and phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button, you'll be sent a confirmation link. You must click on that confirmation link. Okay, if you don't click the confirmation link, we don't know that you took the free trial, so you got to click on that. Okay, so let's get into what happened. Today we traded really lightly today. We got our goal early on. We got our goal on crude oil, but I'm going to go through the gold right now. And yeah, see on gold, I missed a bunch of trades in gold. There was one here that would have been profitable, one here that would have been profitable, one here that would have been a break even. This one here that we took 15 ticks on, this one here that would have been profitable. And that was all in the first half hour. The YVR trades were hitting it pretty good today. And you know, there's one right there. Here's one right here. But that was all that we traded on gold. We only took one trade on gold today. You know, today being rollover day, things were kind of messed up. So I didn't trade a lot. I only had 5 trades this morning. Here on the euro, this was right at the open. There was a shorting opportunity right here. Now, I probably wouldn't have done that because we didn't establish a trend yet. We did establish a trend right here. So you could have taken another one right there. Then it flipped around, started going the other way. You had to bounce off the BBC right there. A YBR trade right there. A YBR trade right here. Put that leg down. But, you know, the euro just wasn't giving it up today. And we rolled the euro. Okay, we're on the H contract on the euro. Crude oil, we had a few trades in crude. The first one right here, we made 10 ticks. The second one, somehow I only made 2 ticks on that. No, this one I made 2 ticks on. This one looks like I made more than 2. One of them was 5 ticks. No, it wasn't. One of them was 2 ticks, and one of them was 1 tick. So we had this one for 10, this one for 1, and this one for... Oh, sorry, this one was for 2. This one was for 1. But we missed a bunch of trades that would have been profitable. There's one there, one there, one there. That would have been a break-even trade had we taken it. But then crude just, it's trending down, but the slingshot's not going to let us get into anything. The ES, on the ES, let me scroll all the way back here. We had just one trade on the ES that I took. There was a long right here that I didn't take. There was a long right here that I did take, and I got to break even on it. There were YBR trades through here, and all of those worked out. Another one right in here. And a shorting opportunity off the PBC right here. Now, when you get a YBR trade and you get a bounce off the BBC and the cycle is the right color and you have separation, that's a really high probability trade. And you can see that that worked out just fine. And you only need one of those a day. So that was the ES this morning. It's rollover day, so I traded really lightly. Just let things get established and the volume between the contracts separate. Okay. Now, if you have not taken a free trial with us, go to the homepage here at CFRN.net. Click on free 5-day trial. No credit card required. Go to eminitrainingschool.com. And all we ask for on this page is your name, your email, and your phone number. And you can tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button to be sent a confirmation link. You must click on the confirmation link. Okay, if you don't do that, we don't know you took the free trial. Now we'll go back to the spreadsheet for a minute. Okay, here on the spreadsheet, today, as I said, is the 11th day of December 2020. If you're going to read this, you got to read all the CFTC risk disclosures down to the bottom. Today I made 13 in crude and 15 in gold. Took 13 minutes in one trade to get to the goal for the day. And we only took a total of 5 trades today. Okay, so on a month now, we're at 29.01. That's over 8 trading days, averaging $362 per contract per trading day. 2-hour trading day. And as you just saw, I missed a whole bunch of the trades. Today is our 205th consecutive day of getting the goal. And on the year now, we're at $98,204. That's over 230 trading days, averaging $426 per contract per trading day. So my goal was to my goal for the year was to get to $100,000 per contract per trading day. And it was also to finish out the year getting the goal every single day. So hopefully, I'm knocking on wood here, but hopefully that's going to work out for me. And if it works out for me, it works out for you. All right. That's it for now. I can pass it back out to fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yes. Yes, I am. Recap of the recap.
Today, 13 minutes, 1 trade, $100 contract.
Good job.
Thank you.
Good job.
Okay, so everybody that I have meetings scheduled with this afternoon and tomorrow, I'm going to create the meeting links for you right now and email them out to you. Okay. Okay.
Okay, guys, this is what we discussed last night in the workshop. We talked about the fact that price, when it hit the 24% Fibonacci price extension, okay, that became resistance. It then took 1, 2, 3, 4 sessions, almost a week, to close above the 24% Fibonacci price extension. And then we took 1, 2, 3, 4, 5, 6 sessions to get to the next Fibonacci price extension. You can look at that as a target, you can look at it as resistance, both. Okay. So we hit that extension, and then we said if price can close on this day, we said during the radio broadcast, we said if today we can close below blue and climbing, below the step line, then that opens the door for price to make a run at the daily BBC. That was the high probability move. We talked about it in depth last night. Price was sitting up here when we were talking about it, and we said the only obstacle on the way to the BBC would be the low of yesterday. And so we did hit that, catch a little bounce like we thought. Now we're making our way to the BBC. Pullbacks to the BBC hold more often than they don't. Now, if we hit the BBC, even if it ultimately doesn't hold, should be good for a bounce, at least back to the 24% fib. When we were talking about this last night, we had about, I think, a 25-30 point drop below us. So for all of you that took advantage of that, that bill is for you. So price coming down to the BBC. We expect it to hold. If it doesn't hold, then what? Okay, we've drawn Fibonacci price retracements from the low. Now, because I've rolled this to the new contract, let's see, this is going to require a little bit of an adjustment. Okay, from the low to that high, to that retracement low. I guess that other one is retracement low. Okay, so that gives us our extensions. So we've gone to the H contract now. Everybody should be rolling forward, or have rolled forward. Now, from the low to the high, the 24% Fibonacci retracement, not price extension. Price extensions tell you where price may go in the future, up or down, depending upon whatever trend you've got going. But the tool that most people are already familiar with is the Fibonacci retracements, which is this tool here. You simply go from the low to the high. Okay, so if we trade through, if we hit the BBC and bounce, or if we just hit the BBC and slice through it, then the first level of support based on 14th century math, not pandemics or politics, would be 3593/94. We actually have a weekly zone, the lowest weekly zone, at 3596/97. So anywhere in this area, support. If that support gets broken, then we've got this swing low, which is just above the 38% Fibonacci retracement. So another spot, okay, for the market to grab a toe hold and bounce. If the 38 gets taken out, that brings us to the 50% fib retracement. If that gets taken out, here's the 62, the red line, but we have a bullish cross right there. And so those of you who have been around any length of time know that as price comes down, if that's the path it chooses, this is a very important price, very important area, and we expect that to be really good support. This is the most important support. This bullish cross down here at the 62, that's the second most important. And these are important in their own right, but this is the one that if this one doesn't hold, then we go all the way back to the lows potentially that were put in October 30th, which would knock the S&P from where we're at now, around 3650, 3625, down to 3225, 400 points. Did I do that right? If I didn't, correct me. So we're almost to the BBC. The BBC currently is at 3613/14. So once touched, look for a bounce. It's possible that bounce only takes you back to the 24% fib extension. And then we get a continuation to the downside. See, all the way up, it's been leg, retrace, leg, retrace, leg, retrace, leg, retrace. If this doesn't hold, then that tells us that potentially we're starting to draw legs to the downside. Leg, retrace, leg, retrace. That's how the market moves. If anyone's new, the green line, it's called the BBC, stands for bull bear cross. When price crosses above it, we're bullish, looking for higher prices. And when price gets below the green line, bearish, looking for lower prices. Back above the BBC, looking for higher prices. And since November 3rd, we've not been below the BBC. Once it closed above, we've had a leg retracement, big leg retracement. There's been no close below the BBC since this candle right here, November 3rd. Okay. Now, we are in week number 123 of Logic 247. We've issued over 5,800 individual alerts live in real time before they trigger for all of our passport holders. So far this week, we've issued a total of 77 individual alerts live in real time across the S&P, the Dow, the Russell, the NQ, crude, gold. I think there was even a natural gas in there this week. Silver. Out of the 77, 18 never triggered. Still waiting on the results of 6. That gives us 53 actionable alerts so far this week, of which 7 were stopped out, or 13% of actionable alerts stopped out. The average we've experienced over the last 123 weeks is 20% of all alerts do get stopped out. Now, that's based on not risking more than $300 per contract per trade, less when possible based on market structure. I teach all of our traders a 3-step methodology when they become a passport holder. And what this does is as opposed to using a fixed number or a ratio or a formula, we simply query the chart and we ask the chart, if we're entering here, where should my stop loss be? And the chart will tell you using this 3-step methodology. If it's more than $300, then you pass. You wait for the next trigger. Because once an alert is triggered, there's a higher probability of it triggering again than not. In fact, many days we see an alert trigger not once, but twice, 3, 4, 5. We've seen 6, 7, and 8 times. Okay, one alert, multiple triggers. That's true of the logic alerts and the concierge alerts. Now, the concierge alerts that's a static report that comes out at the beginning of each session. Purpose of the concierge trade alerts is to give you forward guidance for the entire session. These numbers are good for the entire session. 2 numbers for each market. If price runs up to 36.95 based on last night's alert, we want to be long at 95 and or only looking for longs at 95 and above. If price drops to 36.56, we want to be short at 56 and or only looking for shorts below 56. Again, this is forward-looking guidance. So as price starts to gravitate towards 36.95, then you know you've got an upward bias or sentiment on the session. If price starts flowing down to 36.56, well, sellers have the ball in hand and they're trying to take it downfield. So your sentiment, the closer you gravitate to this, the more bearish your sentiment. Once you hit this number and get below it, then again you would only look for short trades. Above this number, only look for long trades. The best thing to do is when this report comes out, shortly after the Globex open. It came out a little later last night than normal, 7:55 p.m. Eastern. I usually try to get it out in the first half hour after Globex opens. So usually sometime between 6 and 6:30 p.m. Eastern. When the numbers come out, markets you trade, go put 2 lines in the sand. Just draw 2 lines on your chart. So you're constantly visually aware throughout the session. Are the bulls in control? Are they taking me up to this number? Are the bears in control? Or are they taking me down to this number? If you want to grab a screenshot of this, you can. We're going to walk through these. 5, 4, 3, 2, 1. Okay. Now, that static report is forward guidance for the entire session. The Logic 247 alerts, that's a little different, okay? In the private Telegram channel that our passport holders have access to, these come out live in real time around the clock from Sunday night at 6 p.m. Eastern to Friday afternoon at 5 p.m. Eastern. These come out as opportunity presents itself. So you've got a static report giving you forward guidance for the entire session. This is telling you where opportunity exists right now. And I always build into the alerts enough time for you, wherever you're at, to get to your desk, put on your thinking cap, put on your trading cap, look at the chart. You should never trade an alert just because it's an alert. You should take the alert, study the chart, and then if you choose, execute the trade. Once you understand what the trade is all about, why is the entry here? Why is the target there? Okay. See, our goal is not to just give you these high probability, low risk trades that you can just trade around the clock. That's part of it. But we're spending 2 hours a day in the live training room where Michael is teaching you every rule, every aspect of our very simple methodology and strategy. So while you're learning how to find these opportunities yourself, we're giving you the opportunities while you're learning. That quickens the learning curve so much I can't even begin to tell you. We are now at alert number 5,870. Out of 5,870 alerts, 20% have been stopped out over the last 123 weeks. S means sell, T means initial target, PS means potential support, second target, and the weekly trading zone is the final trade to target. So you got 3 targets here. Here you've got 1, 2, 3 targets, final target. Okay. Sometimes you have 1, 2, 3, 4, 5 targets. 2 targets, 2 targets. These are all fresh, just waiting on results of those. Here we got some Z's, means no trigger. In Q, short, initial target, potential support, weekly trading zone. Here's the S&P. Sell 36.56. Initial target 36.54. Weekly trading zone 36.52/63. The market made $1,387.50 available on this alert. There's gold, got stopped out. Here's crude. You buy at 47.10. The initial target's 47.20. Potential resistance 47.70. Then 48. Then 48.60. The market made $190 per contract available. Okay. This week, because of this sideways consolidation we've been in until today, which is looking much better, we've not had a lot of follow-through. Okay. Now, I said we don't want to risk more than $300 per contract per trade, less when possible. Using market structure, sometimes you don't have to risk the full $300. Okay. Now, on the initial trigger, this got stopped out. On the second trigger, sometimes you got to enter trade twice. On the second trigger, it ran all the way to the final target. That's S&P. There's almost $400 per contract on crude. All of this information is available to you when you're on the trial, or if you're already a passport holder. You have access to all 5,870 alerts that have been issued. We're very transparent. Not only do we put the alerts out in real time before they trigger, we maintain a historical record so that, you know, you can mine the data. Someone asked me in a mentoring session the other day, which market has the highest percentage of profitability of the logic alerts? In other words, which is more profitable on average, the S&P, the Dow, the Russell, the NQ, Crude, Go? I said, I don't know. I said, but because you're on the trial and you have access to all the data, you're welcome to go through there and mark it up, you know. And if you do it, if you do that legwork and you arrive at, you know, a little spreadsheet that says, you know, S&P is profitable X percentage of the time, and the Dow is profitable X percentage. I'd love to have that data, but I just don't have the desire to do it. It's a lot of counting. Okay, so this is how they flow. Okay, here's December 8th, December 7th. There's another stop out. Another stop out on the S&P. There's 305 per contract, 390 per contract available, 160. $100. This one had $2,400 per contract available. If you traded that alert with one contract, that pays for half the passport. Passport's $5,000, $49.97. This one trade, you could have picked up half the cost of the passport. Now, when you buy a passport, that's a lifetime membership. You have these alerts for life. The logic, the concierge. You have access to the live training room every day for 2 hours, Monday through Friday for life. You own the indicator set. You get the weekly zones every Monday morning, 6:15 a.m. Eastern. And those create a beautiful framework because you know ahead of time. On Monday, you know where on Friday price is going to potentially run into support and resistance. That's what the weekly zones serve, as fixed support and resistance. And once they're published, we've published them since December 14th of 2009, but when they come out Monday morning at 6:15 a.m. Eastern, they're carved in stone for the entire week. So I just scrolled you all the way through week 123. Last week, week 122, had a total of 50 alerts, 4 never triggered, 46 actionable. Only 2 guys stopped out. That's very unusual. 4% of actionable. Remember the average number, 20%. All right. So, with that said, let's go to the smaller time frame chart. Now, everything I explained on this daily chart, okay, about price closing below blue and climbing, below the step line, taking out the low of this candle, means price is trying to get to the BBC. Everything we teach, everything we do is fluid across all markets and all time frames. So the same underlying principle that you just heard me discuss on this daily chart, it's identical on the 30-minute, on the 5-minute, on the 1-minute. That's part of what makes our methodology and strategy so simple. Okay? Trading's not easy, but it can be simple. Most places will tell you, well, you know, you can't really trade the S&P and crude the same way. Why not? Michael does it every morning right in front of you. I put out alerts around the clock all week long. All based on the same methodology, the same strategy, the same everything. Okay? Markets are fractal in nature. Now, I will say this, the larger the time frame, the more important the information it conveys. When it comes to, now we always look at the daily chart for guidance, okay? I mean, big picture, we know what the highest probability thing is. So if we believe price is going to the VVC, and we got this big red candle, and we're oh so close, without even looking at the 30-minute chart right now, I know I don't want to take a long trade. Why don't I want to take a long trade? Because the larger time frame tells me that price, which is currently at, I don't know, 36.28, is heading down to about 36.15. Okay. All right. Let's go to that 30-minute. See how this matches up with the daily? We don't want to be going. Now make sure I got this on the right contract. ESH21. Yes. If you haven't rolled forward, please do. In fact, this little thing right here. No, that's not it. One of these says roll forward. Right here, roll forward. Under view, go to roll forward. It'll roll you if you haven't rolled yet. Okay. And if you ever need to roll back, right there. Okay. So last night's Concierge Trade Alert for the S&P was to be short 36.56. That happened right here. So okay. Now this little window of opportunity was something we drew in, I think, last night in the workshop. Yesterday on the radio show, I think we had put this out, 36.58 to 36.54, as price was coming down. This was yesterday's Concierge Trade Alert. This is today's. I stuck it in that box. Let me just put it up there. Okay. All right. So price comes down through 36.56. So that triggers the Concierge Trade Alert. 36.50. Remember, we want to be short at 56 or only looking for shorts below 56. So from 56, the initial drop. Now we have a weekly zone this week at 36.52 / 36.53. So when price drops to a weekly trading zone, we expect it to be good support until proven otherwise. Good support. We spiked it a little bit here. Good support, support, support. And what was once support, once we trade through it, becomes resistance. See, it's these underlying principles of how markets work. You know, people go, I know how markets work. Okay, do you? Maybe you already knew what I just showed you, okay? Now, only three things happen at a weekly zone. Consolidation, rejection. Well, I don't think I have a good rejection here. Yeah, right here. The only thing touching the zone when the candle closes is just a big wick. So price got rejected there. Consolidations, most likely. Rejection, second most likely. The third and least likely, but it happens, is the slice. You get a candle that just slices through the zone like it's not even there. Well, here's what we anticipate when that happens. Once the move runs out of steam, we look for a reversal back to the zone it sliced through, and then a continuation in the direction of the slice. So from 36.56 to the zone at 53, looks like it went to 53.5, so 54. From 56 to 54, it's 2 points, 2.5, okay? Then price gets back above the trigger. Now notice we're going from support to resistance to support to resistance. Support, resistance. It's not unusual. Okay. Now, the 62.63, that is a last week zone. But occasionally there are zones that hold so much sway over the market that I end up leaving them on my chart the entire week. So the double line is a last week zone. The single lines are this week zones. Okay. You know, and just a good example of this is once price gets below the BBC and starts approaching a weekly zone, there's like a magnetic quality that just draws it in, right? High probability, low risk trade setup. Over here, when this red candle was building down, you hit the zone overhead, you consolidated. Once you're back below the BBC, it's just a matter of being short. In this case, 36.55 down to 36.53. And then some. And there's a way to stay with this kind of trade, okay? Like you have one trigger. I guess we only had 2 triggers on this one. 1, 2, okay. Now, on this second trigger, that is huge candle here. So we're into an extended move. So even though we have targets on the downside to work with, on an extended move, you can say, you know what? I'm going to stay with this one until the chart tells me to get out. Okay, so if you're in on this trigger here, you'll notice the step line. It's on the left side here, on the left side of red and falling. As long as price and the step line are on the left side of red and falling, there's no reason to get out of the trade. You're in a perfectly good trade. Now, we did walk sideways here for 4 30-minute candles. It's 2 hours. But still, the chart's not giving you a reason to get out. Now, here's the reason. Okay, see how the step line's on the left side all the way down? And then, suddenly, the step line, it steps down and over, down and over, down and over. But it got down here, and it stepped over, stepped over. So on a short trade, if you're staying with it, now there's nothing wrong with grabbing your 2 points and go. Nothing wrong with that, but I know some of you want to stay in them longer. So you wait for what we call the exit signal. Here's how you define an exit signal. The step line, which was on the left side of red and falling, has now crossed over to the right side of red and falling. So the first green candle that closes above the step line, after it crosses, that's my exit. That's the market telling me, hey, I think this move's over. You may want to take your profit. Okay. So the closing price of this candle was 36.34 and a quarter. 36.34 and a quarter. We'll call it 36.35. Okay. So now, if we take the entry price, the Concierge Trade Alert entry price to be short 36.56, 36.56 minus 36.35, which is the exit signal, that's 21 S&P points. By getting in where the alert told you and by getting out where the chart told you. Now, I'm going to tell you something. Getting your information from the chart's a whole lot better than getting it from me. But until you learn how to read the chart like a newspaper and understand fully what the indicators are telling you, I'm the man in the middle. I'm the translator. Okay? I just keep telling you over and over and showing you over and over and telling you and showing you and coaching and mentoring until, like last night in the workshop, I forget which question I was answering, but I think it was Clayton. He goes, man, I just had my light bulb moment. And if you've not had your light bulb moment yet, hang in there. Because we're not changing this up every day. Oh, well, today, because the market looked like this, we tried to do this, and then, tomorrow, if consolidation continues, then we're going to pull out this indicator and oscillate. No, we just don't do that. We've worked really hard to make things very simple. Okay? As simple as this. If price is below the BBC, it's trying to get to the weekly trading zone below. And when price is above the BBC, it's trying to get to the zone overhead. And when we get to that zone, we expect resistance till proven otherwise. And then price gets below the BBC. We hit the zone. We caught a nice bounce. But sellers were persistent. They took us down. They took us down. That is a this week weekly trading zone. On this move, 36.89. Now, I've scrolled back a few days. We're on December 9th. 36.89. That was the concierge alert on that day. Price traveled all the way down to the 36.52 zone from this week. Step line crossed over. See how step lines on the left side all the way down? And when the move runs out of steam, the step line crosses over. Once the step line crosses over, you're looking for the first green candle on a short. You're looking for the first green candle that closes above the step line. So the closing price here is 36.63. So 89 minus 63 is 26 S&P points times $50 a point. It's $1,300 per contract traded. If you've earned the right to trade 2 contracts, that's $2,600. And if you've earned the right to trade 10 contracts, that's $13,000. Now, how do you earn the right to trade a certain number of contracts? One at a time. You start out in SIM in the demo account. As you're learning the strategy, you're trading in the simulator every day. Watch Michael, listen, ask questions, put on takeoff trades. Nobody's watching you, nobody's grading you, nobody's going to try to chart shame you if you don't do it right. Okay? You got to just roll up your sleeves and get busy. Because it's a demo account. You can't lose any money in there. Not real money. Now the idea is, as you follow the blueprint, we have a 2420 blueprint is called. It's designed to help a trader go from 1 to 20 contracts over a period of 24 months. You start out in the demo account. We want to see you put together 10 consecutive days in a row where you reach your goal in 10 trades or less. Once you accomplish that, and you know what? We're not looking over your shoulder. So it's kind of the honor system. If you say you put together 10 days in a row, then awesome. Book a mentoring session so I can give you some final words of encouragement and wisdom before you go live. So after the 10 consecutive days in SIM, you get the green light to go live with 1 contract. Now, once you go live with 1 contract, your goal is to increase your account balance by $2,000. Purpose of that is so that when the blueprint says okay, time to add your second contract. You're adding it with profit you earned in the market. So now you're going to trade 2 contracts for a while. Pretty soon the blueprint's going to say, okay, time to add contract number 3. So you add contract number 3 with profit you earned in the market. That's how you earn the right to trade someday 10 contracts or 20 contracts or however many contracts you want to trade. By building your business 1 contract at a time and reinvesting your profits back into your trading business so that you can increase the number of contracts you trade. Now, if you get 2 points with 10 contracts, that's $1,000. If you trade 1 contract, how many points do you need to make $1,000? Well, $50 a point. You would need a 20-point move in the market to make $1,000 with 1 contract. But with 10 contracts, you only need a 2-point move to make $1,000. And with roughly 250 trading days in the year, that puts you in the top 3% of wage earners worldwide. So you have to address this issue. Part of the blueprint walks you through writing your business plan and your trading plan. Those are 2 very different documents. It's like if you had a Subway sandwich shop. Your business plan would be, how you're going to run your business. All the rules, the regulations, the hiring, the firing, the vendor you're going to buy from, the profit margin you have to have on everything you sell, all that stuff. That's your business plan in the Subway shop. Your trading plan would be that little notebook that the sandwich makers have that tell them how to make a factory authorized foot-long Black Forest ham, right? Business plan, trading plan. Business plan, the making sandwich plan, okay? Very important, you need to do them. And don't try to do it all in an afternoon. Do it over the course of the time that you're trying to put your 10 consecutive days in a row together. Because the reason, I don't like gambling analogies, but the reason the casinos are so successful in Vegas is because they created the rules. And when they created the rules, they put the odds in their favor. Now, they did set it up so that Joe, from Idaho, he can win some, but we all know what you win in Vegas stays in Vegas. So the definable edge is with the house. The house. Now, this amazes me. People walk in there, pony up their hard-earned cash, knowing that the odds are not in their favor. The odds are not in their favor. That's the definition of a low probability experience. High risk, low probability. Now, when you write that business plan and write that trading plan, you're creating your rules. They can mirror what Michael teaches you identical in the room. You may have some flourish that you put on it, okay? But make sure that whatever rules you put into your trading plan, make sure you can live up to them. I mean, it may all sound good when you're putting it on paper. But then the question becomes, can you actually follow your own rules? Because the casino, if the blackjack dealer does not follow the rules, their formula to the T, if the eye in the sky catches them doing something, off the book, I don't mean cheating or anything, I mean just not following the exact formula, they get bounced instantly. Because the casino knows that the only way they have a definable edge. The only way that the deck really is stacked in their favor is if every hand of blackjack is executed per the written rules. Okay? Now, most traders (9 out of 10) are the trading industry's degenerate gambler, right? You probably know a degenerate gambler in your life. And I know that sounds harsh, and I don't mean to hurt anybody's feelings, but you've got the gambler. Maybe he's not a degenerate. You got the gambler. The odds are not in his favor. I mean, think about this. Let's say you're standing there by a blackjack table, and a guy sits down to start playing blackjack. And a guy walks up to you and says, hey, you want to place a bet on who's going to win the next hand? Who would you bet on? Would you bet on the dealer, or would you bet on the gambler? If you're smart, you're going to bet on the dealer because the dealer wins more often than they don't. The house wins more often than they don't. Again, why? Because they wrote the rules. You get to write your rules. I'm only going to go long when price is above the BBC, when I have blue and climbing beneath me, I have the step line beneath me. I've got the step line on the left side of blue and climbing, and down on my slingshot, the cycle is blue and above the 50-yard line. It could be that simple. Now, every time the chart in front of you meets those conditions, you don't second guess. You don't scratch your head and wonder if it's going to work this time. You're like the dealer at the table. You know, those cards come flying out of the shoe. Let's play cards. Okay? Now, the reason traders struggle with doing what I just said is because we get hyper-focused on the outcome of this trade. We literally let every trade we enter into consume us and define us. If the trade happens to be profitable, we get puffed up real quick and we're dancing on our desktop like Fred Astaire. If the trade is not profitable, we feel shattered because either we're stupid, or our strategy doesn't work, or they ran my stops, or the broker messed me over, right? Well, none of that's true. What happened was you did analysis, you developed a narrative. The narrative led you to enter at a specific price, and once you place the order, you have no control over the outcome. But guess who does? Every other trader on the planet. See, when you go long the S&P at whatever price, in order for you to have a profitable trade, you need other traders to come in who are willing to pay a higher price than what you just paid. So if you get in at 34.20 thinking it's going to 34.22, you need somebody getting in at 24.21 who thinks it's going to go. You see what I'm saying? The outcome of your trade you have no control over. The outcome of your trade is determined by the buying and selling decisions that traders who come after you make. Give me 1 second, guy. Please. Oh, bummer. Okay. Oh, bring you up to date. Well, I'm thinking about it. Mind medicine Got it. Vaxart, got it. In fact, let's look at those things. I know we're in the middle of one thing, but we'll multitask, huh? This one, because it's a non-marginable security, I gotta wait till next Wednesday before I can grab this one. This is not a solicitation to buy or sell any security. Always check with a licensed investment professional before making any investment decision. Okay, I was able to grab some at 305 and then some at 330. So, up on the day. This is an oral vaccine. Some clinical trials are due out. You know what? Keep talking about it. Let's find out. PHRT. Yeah, that's what we call buying the dip. One day ago, up almost 2,000 in 2020. Is Vaxart still a buy? In the race to develop vaccines against COVID-19, various pharmaceutical and biotech companies have used a number of innovative methods. Electroporation devices that deliver DNA plasmid vaccines directly into patient cells, and in the case of Vaxart, a coronavirus vaccine that can be taken orally in tablet form. Assuming that it eventually becomes effective and passes regulatory muster, Vaxart's tablet could become one of the best ways to get people vaccinated in the developing world, where logistics are more difficult and healthcare providers have limited access to the cold storage facilities that the leading injectable vaccine candidates require. With Vaxart stock up around 2,000% year to date, is there still room for new investors to profit? Well, I don't know. Is there? Okay, we're down 67% from the, so we got a 62% retracement. We spiked to 62. To its credit, the company's vaccine candidate does have logistical advantages. First one, ingest the oral tablet. Vaccine candidate as opposed to receiving an injection. Room temperature stability, that's huge. In an update on November 12th, Vaxart disclosed that after administering 2 doses of its vaccine candidate to Syrian hamsters, they developed significant antibody response levels against the SARS-CoV-2. The study has severe limitations as it is preclinical. Normally, just because an experimental therapeutic works on rodents does not imply that it will also work on humans. However, what's promising for Vaxart is that its competitor, Johnson & Johnson, was able to validate such a key hypothesis. During preclinical studies, Johnson & Johnson's coronavirus vaccine candidate protected hamsters against COVID-19 after dosage. After its advancement into phase 1 of 2, clinical studies replicated its success, blah, blah. The main problem facing Vaxart at the moment is not so much scientific validation, but credibility. The company's under federal investigation and subject to multiple investor lawsuits over allegations it exaggerated its role in Operation Warp Speed. Well, I might give that stock back. I think I get out with a profit right now. I don't recall reading this, but you know what? There's always some issue. I didn't get much of it anyway. I think 100 shares, so it's not a big deal. Back in June, Vaxart stated in its press release that its vaccine was selected for the U.S. government's Operation Warp Speed. In reality, the candidate was only part of the operation for preliminary studies in animals. A hedge fund that controlled the company cashed out over $200 million in profits on its June news release via alleged insider trades. Oh boy. Again, it's only 100 shares. Despite the challenges, Vaxart is making concrete progress on advancing its vaccine candidate. Previously, the company licensed 2 oral seasonal flu vaccines to large-cap pharma companies who advanced them to commercialization. Since its inception, Vaxart has only lost a modest sum of $135 million. Currently has $133 million in cash and equivalents. Now, you guys familiar with DoorDash? This is the food delivery service. I mean, I guess they'll bring you food from any restaurant, whether it's Burger King or McDonald's or whatever, if they've got a deal with that with DoorDash. So anyway, they went public the other day. This company's never made a profit. Not Vaxart, but DoorDash. They've never made a profit. And their IPO, at the end of the day, their valuation was $60 billion. That's B as in boy, $60 billion. For a company with a market cap of only $622 million, Vaxart looks a little undervalued, considering the multi-billion-dollar potential. As a result, biotech investors who have a high risk-reward mentality may consider buying a small block of shares. Okay. For everyone else, I would recommend waiting until at least phase 1. My thought is a run-up on speculation prior to the results coming out. And if the results are good, you can stay in. If the results aren't good, you have an order already in place below the market, so that if the clinical trials come out and that thing gets slammed down, you got an exit in place. And if the results are positive, then you would look for some upward appreciation. So I wonder what these guys have on MMEDF. Let's see if they wrote any articles about that. You guys got to have a search. Let's just be missing it. Yeah, what we're going to pass. So, MMEDF. You go now. What a nice move. It would have been much nicer if the other day, when I sat down to do this, if I had actually followed through. We were trading, I think, $2.20 that day when I first talked about it here on the radio. So I'd be on my way to a double. Okay. And then Shroom, which is Champion Brands. It's non-marginable, so I wasn't able to buy this today. I got to wait 4 days till Wednesday for the funds to clear. So when we talked about this the other day, it was at 40 cents. Doubled. Yeah, right? All right. Okay, back to the deal. So what's the next high probability move from here? Price has rallied up to the BBC, which we expect to be good resistance until proven otherwise. Now, you see this pullback here? Okay. It reached all the way up and touched that zone overhead. It's like an obsessive compulsive thing. Price needs to touch these important prices, important areas. So it seems. But okay, we spiked above, but we're still touching the BBC. We ran up, We closed above, but we're still touching the BVC. It's still joined at the hip. So the next 30-minute candle closes us back below the BVC. Now you can do one of two things. You can simply sell the open of this candle, or wait for this candle to open below. See, remember, blue and climbing represents support. Red and falling is resistance, or an anticipation of lower prices. You can see here where you had a bearish cross. Red line crosses below the green line. Bullish cross is exactly the opposite. Blue line crosses above. Okay, so we came right up on the verge of a bullish cross, and then it rolls over. I always like these. This is nice. Now, if we look down here on the slingshot, we're below the 50-yard line. That's the when applied to the alerts, this is the most important aspect of the slingshot for me, or really the only, in the manner that I use it. If we're above the 50-yard line, that encourages me on a long trade. If we're below the 50-yard line, and we go from, well, just being below the 50 is comfort if I'm in a short trade. This is not part of my decision-making process, but it helps me determine how aggressive I want to be on a trade. If this mirrors this, then I have more confidence in the trade. I'm possibly more aggressive on the trade, possibly trade larger size, that kind of thing. Okay. So the fact that we're below, and the fact that we went to blue, and then came back to red, okay, so we had a leg, a retracement, a leg. Now, this leg we put in a higher low. So it's important to be aware of that, because we made a leg like, look at this, we went leg, retrace, leg, retrace, leg, retrace. So the high probability is that we print another leg to the downside, which should take us at least to you know, the low of these bodies, the low of these tails, or the next zone below. Now, you've got red and falling. You've got red down here. Initial window of opportunity on this. $36.32 to $36.27. So that's a 5-point window of opportunity. If price, once triggered, if it takes out these lows, then you've got potential support off these lows. And then you've got the lowest weekly trading zone for this week. Window, potential support, window. Lowest weekly trading zone for this week. Okay. Anybody have any questions on this? Now, everything I said about the daily S&P, all the principles, underlying rhythm, everything, it's identical on the 30-minute, the 5-minute, the 1-minute, the range chart. And it's also true of the Dow and the Russell, the NQ, gold, crude. People say you can't, trade everything the same way because they have different personalities. I don't even disagree with that. But we're only looking for a window of opportunity. So no matter what kind of personality, if the S&P is grumpy today or hungover, whatever, whatever personality the S&P is exhibiting today, whatever traits, characteristics. All I know is that if we trade below the low of this candle, buyers just stepped in here and said, I'm going to run this puppy up. And they got slapped right down. Okay? So once that low is taken out, I got no physical obstacle to get in my way. I would expect support, down in this area, which is why I would, monitor this very closely. And then potential support here. If that support's taken out, then this is a huge window. 3615 down to 3600. So that's 15 S&P points at $50 a point. If we get down there. Now, price is either going to consolidate sideways into the close, which we hope it doesn't, or it's going to drop, or it's going to move higher. While there are no obstacles in the way of price getting from the top of the window to the bottom of the window, for price to go higher, price would have to overcome 3 immediate obstacles. When price is below the step line, a move up to the step line represents potential for resistance. A move up to red and falling, resistance. Move up to the BBC, resistance. We get above the BBC, and now we got this obstacle, and this obstacle. So, really just no interest in the long side here. The high probability, simple and obvious, is that price just drops. Path of least resistance. Doesn't have to overcome anything except the low of this candle, which is, come on now, work with me. 36.33.50. So I'd say entry about 36.32. 36.32. 2. 32.27. So that is a 5-point window of opportunity at $50 a point, $250 per contract traded. Of course, for the 10 contract trader, the trader who has earned the right to trade 10, put in the time, okay? $2,500 move. $5 points. All right. Let's blaze through the rest of these. I'm just going to point out the numbers because all of the explaining I did, it's identically applied to the Dow, Russell, NQ. Okay, last night's concierge alert on the Dow was to be short 29960. Okay, sell 29960. And again, the alerts got out last night, as you can see, at 7:55 p.m. Eastern. Okay, so from 29,960, so we got a slice, pulled back up to the weekly zone that it sliced through, continued in the direction of the slice. Okay. So from 960 to 860, that's 100 points. $5 a point, $500 per contract traded. And then down to 35/40, 960 to 740, it's 220 points, $5 a point, it's a little over $1,000 per contract traded. And then from 960 to 640. 960 minus 640 is 320 points. That's what the market made available at $5 a point. $1,600 per contract traded, $16,000 for the one who put in the time, the one who was dedicated, the one who developed the self-discipline and self-control that a consistently profitable trader must have. Most of us don't come, out of the factory with it pre-installed. Most of us have to work, unless you're Kwai Chang Caine, we have to work at this thing called self-control, self-discipline, patience. Those are critical tools. It's critical that you understand it's a business based on probabilities. It's critical that you must have a definable edge. It's critical that you must take your emotions out of the equation. You must know that no one trade or series of trades defines who you are as a trader or whether or not your strategy is effective. Someone asked yesterday, what's the minimum number of trades for a sample size? According to Mark Douglas, Trading in the Zone, 20. I thought that was a huge number back in the day. Our sample size, as I just showed you earlier, on Logic 247 is now over 5,800. It's individual, unique moments in the market where our methodology, our strategy, and our indicators said, ooh, look here. Window of opportunity. High probability, low risk. And even when all the stars align, still get stopped out 20% of the time. 9 out of 10 traders spend all their time and treasure trying to figure out a way to not get stopped out. Consistently profitable traders don't do that because they understand that getting stopped out is as much a part of trading as it is breathing is a part of life. Because you can't know the future, no matter what any website says. Put them to the test. Ask them to prove it to you. They'll probably say, "Oh, we got nothing to prove." Okay, all right. Well, they just answered your question, right? Knowing what the next high probability move is, that's very, very possible. We have 5,800 and something alerts that there's proof, evidence. What Michael does in the morning in the live trading room, that's proof, that's evidence. So you have to decide as a trader what you want to do. Do you want to keep doing what you've been doing, keep blowing up accounts, never really understanding what's going on? See, when our traders enter a trade, they understand why that's a high probability, low risk opportunity. And whatever the target, they understand why those are the targets. They understand that when price hits a zone, from below it's going to be resistance in most cases. Support as we move up to a zone. Okay? And all of these things are yours as a passport holder. We don't have any upsells. You pay us one time, and that's it. One of the greatest benefits, along with the one-on-one mentoring and all of that, is this. The discussion group. Okay? There are thousands and thousands of posts in here going back, I guess, 123 weeks. Charts. When our traders get their goal for the day, they share it, you know. Got my goal on the S&P, got my goal, whatever. Here's, you know, most internet investment or trading chat rooms or message boards are foul places. Bad language, bad attitudes. Everybody's got a chip on their shoulder. They've been lied to, ripped off, and they're not making any money. That has happened to mostly every one of these people in this discussion group. And then they found us. We're not perfect. We're not choir boys, none of that. But we do treat everybody, whether you've paid us or not, we treat you with dignity and respect. All we ask is that you do the same. You'll make some good friends here if you hang around long enough. You'll meet some really nice people who share the same belief system as you, same values, same morals, same ideals, same Savior. And that's powerful. Okay, hey, what happened to Garrett? Garrett, you were supposed to be here an hour ago, brother. I don't know, Tim. You heard him yesterday. He was going to be here. Tim, you want to try calling him? You got his number, right? If you don't have his number, I'll give it to you. Yeah, because let him know I got to go here in just a bit. So if he wants to pop on, let me find his number. I'll send it to you. I'll send you his number in Telegram. If you could call him real quick, that'd be great. Do you have his number, Tim? I'm sure you do. Just say yes, please. Okay, you got it. Okay, perfect. Awesome. Okay, Tim's gonna see if he can scare up Garrett, because Garrett just wrote a new observations, his newsletter, and that video that I posted in the Breeze channel. I mean, I don't know how much of that's conspiracy theory, how much of it's somebody's imagination, and how much of it's the truth. I don't know, but I know it's pretty scary. They're talking about if you get this, number one, when you go to get tested, they give you the virus when you go to get tested. Okay, I know that sounds like kooky, but this is kooky, right? So, where's that video? Here it is. Biggest deception on the whole world in-game plan. This will alter our lives and paradigm forever. I know this will shock and disturb most people listening. It says that the virus is being spread by 5G. It says if you take the vaccination, there's a microchip, somehow, I don't know how, inside of the vaccination. Is it true? Is it live, or is it Memorex? I don't know. Okay, so if you haven't watched that video, please do. Joe, I'm trying to find your message. Yeah, I'll do that right now. Give me 1 second, guys. This just in, Garrett says he's not going to be able to make it. Okay. Well, he'll probably be here Monday. He wasn't feeling well the other day, but then yesterday he was like on top of the world again. So keep him in your prayers. John, keep him in your prayers. Every time he thinks he's ready to come back on the show, he kind of has a relapse or whatever. All right, we got to get through the rest of these real quick. We just did the Dow. Next on the list is the Russell. Okay, last night on the Russell Concierge Trade Alert, said to be short 1903. $1903, the swing low, swing low was $18.93. So that's a $500 per contract move. Price got back above the trigger, did it again. Okay. Now the long side for the Russell was 1933. Sometimes you get two-sided action. 33 hasn't triggered yet. Okay. Next on the list is crude oil. Doesn't look promising. Long at or above 47.40. Never made it. Short 46.40. Yep, walked right up to the line and changed its mind. It's like 60 bucks, you know, or stop out. Okay, after crude in Q. Hang on a minute, guys. All right, I'm back. Wow. Another day in the life. All right, where was I? We're on the NQ. Okay. We're on the NQ. Long 12, 459. Haven't touched that. Short 12, 337. Sell 12, 337. Okay. So from now, bearish cross, price pulls away, price pulls back, down close, boom. Just like Michael teaches in the room. So from 37, we put in a low 262. 337 minus 262. It's 75 points. The NQ pays $20 a point. So the market made $1,500 per contract available, or 15 grand, you know, or 3 grand if you're a 2-contract trader. That's what the market made available. What we make available is the entry, the guidance, the targets. We teach you how to query the chart to determine where your stop loss needs to be based on market structure. The market does the heavy lifting. All the other buyers and sellers on the planet, they do the heavy lifting. All right. We've triggered once. We've triggered twice. On this trigger, we made it down to the zone below at 245. That is the lowest weekly trading zone for this week, 12,245. Alright, so 337 minus 245 is 92 points times $20 a point equals $1,800 per contract traded. So you had a $1,300 move, you had an $1,800 move, and it looks like price just might want to get back above the trigger. And in doing so, they give us another leg to the downside. Okay, gold. Zone to zone, back to the zone, up to the zone, up to the zone, back down to the zone, up to the zone, down to the zone, up to the zone, up to the zone, back down to the zone. Getting these zones on your chart as soon as they're published Monday morning, very important. And hang on to last week's zones because they hold sway over the market as well. Okay, Concierge Trade Alert for gold last night. Be short below 1837. That's going to be right there. From 1837, we traded down to 29. That's an $800 per contract move. The long side was 1846. And from 1846 up to 1850, $400 per contract traded. It's two-sided action. 800 on the short side is what the market made available. 400 on the long side so far. Okay, price just pulled back to the BBC, so there's every good possibility that will trigger again. And you'll have an opportunity to trade back to these highs, resistance. If price trades through resistance, then you could just ride it right on up to the next zone. Last but not least, silver. Last night's alert on silver. Short below 23.76. Now, do keep in mind, these are the concierge alerts. This is the static report, forward guidance for the entire session. The Logic 247 alerts, those come out individually, live in real time, as opportunity presents itself. Okay, from 23.76 down to 23.70, that's 6 cents. About $300 per contract traded. A $1 move in the price of silver is worth $5,000 per contract traded. On the long side, 24.24. Swing high, 24.24 and a tick. So on weeks like this where we're consolidating and we don't have all, see, this is consolidation, right? We don't have that same follow through that we're accustomed to. So while we still had a tremendous week, one thing that stood out this week was this. We had a higher number of PTs than normal in relation to the number of FTs. Usually it's, maybe 3, 5, 10% of the actionable might be a PT. But this week there was a higher number because of that lack of follow through. Okay. Now, for those of you that have been on the trial this week, it's time for you to make your intelligent, well-informed decision. There's all kinds of places on the internet where you can find all kinds of offers. Trade calls and indicators and strategies and the secrets your broker doesn't want you to know, all that nonsense. What we offer is uniquely different. You're not a number. You're not just another client or student or customer or any of that. We build relationships with the people who become a part of the CFRN family. And when I call it a family, I don't feel cheesy by saying that, because it really is. Because Michael and I both, and Valerie, we spend a lot of one-on-one time with all of our members. Mentoring sessions, just they're calling in for help, talking in the workshops. We get to know one another. Now, some traders just want to come, learn how to make their 2 points a day, and then they vanish. They might pop into the room every now and then or show up at a workshop on occasion, but they got what they wanted. They wanted a high probability, low risk, simple strategy that they could use every day to take a couple points out of the market. So they came, they got a passport, we taught them how to do exactly what they wanted to learn how to do. They don't need us anymore. They're running some other kind of business, they got a family with 9 kids, whatever the case, they're busy. Some people really hunger for the sense of community because trading is a lonely business. I would say 95% of all of our passport holders trade alone every day. They would be alone if it were not for the live training room and for this broadcast. Okay? So, whatever your need is, you just want us to teach you how to consistently grab a couple points a day out of the market, increase the number of contracts over time. We'll teach you that. And then if you don't want to hang out with us every day, you don't have to. But when you hit a rough patch and you do need somebody to talk to, somebody that speaks the language you speak, we're here. Because once you pay, you're a member for life. It's $5,000, $49.97 to be exact. And as I went through the alerts today, I pointed out one of the alerts, the market made $2,400 available. You could literally pay for a passport with 1 day's production. Now, I'm not going to guarantee you that that'll happen or even promise you that'll happen, because that would put me in the same boat as the other people that lie to you all the time. I don't know what's going to happen. I don't know if you're going to be able to follow my instruction. I don't know if you're going to have a problem with self-discipline, jumping the gun, dragging your feet. I don't know. However, as you and I keep meeting in one-on-one mentoring sessions, which you have unlimited access to as a passport holder, as I get to know you and I get to know your trading, how you think about trading and how you see the market, then all of those things that are holding you back or that have held you back in the past, I can help you with those things. Okay? So the most important thing is when we have a mentoring session, don't tell me what you think I want to hear. Just tell me the truth. I can deal with it. All right? Just tell me the truth. You know, I'm not doing, you know, if this is the case, I'm not doing good, I'm struggling, I don't understand, you know. So, okay, we spend 45 minutes together. Answer as many questions as I can. Then you go and apply what we talked about. And I record the sessions so that you can watch it again, you know, later if you want to. So then you go and apply the things we discussed. And then you book another session in a couple days. And we just keep meeting and meeting and meeting. And then all of a sudden one day you'll go, Eureka! I just had my light bulb moment. Okay. Any questions? Any questions? Now, Sunday night at 6 p.m. Eastern. Sunday night, 6 p.m. Eastern. I want to show you last Sunday night. If you want to be in the channel with us trading Sunday night, you don't have to wait for Monday morning anymore. Sunday night at 6 p.m. Eastern. That's when the global markets open. I'm just going to show you real quick what happened last Sunday night. Okay. One, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 alerts on a Sunday night. Now most traders don't even know the market's open on Sunday night. Everybody's waiting on the Wall Street open at 9:30. But we know better. And Globex trading, I mean, it used to be, they used to call it a shadow market. It was there, but nothing big ever happened. There were never any major moves began or ended on Globex. Not true anymore. We're as likely to see a major reversal on Globex as we are on the Wall Street session. There's still more volume on the Wall Street session, but Globex volume is steadily increasing, almost daily. There'll come a time when it'll be every bit as relevant to the world as it is to us. So all that on a Sunday night. Okay? So if you want to be in the channel with us Sunday night, if you've taken the trial, you know what we do, you know how we do it. You're going to learn how to do what we do. You're going to learn to find windows of opportunity on your own. And until you master that, I'm going to give you every window of opportunity that I see on the S&P, the Dow, the Russell, the NQ, gold, crude, sometimes copper, sometimes nat gas, sometimes a euro, sometimes a pound. But the mainstay, S&P, Dow, Russell, NQ, crude, gold, silver. All right. It's time now for our good word for the day. Yesterday, we talked about what you weren't sent to do. Today, we're going to talk about quality and quantity. Psalm 127:3. Children are a blessing and a gift from the Lord. Some people say it doesn't matter how little time you spend with your children as long as it's quality time. I read something not so long ago that said the average father in America spends 7 minutes in conversation with his children daily. 7 minutes. I mean, kids are busy, you know, they got things to do, and you're busy, you got things to do. But you know, before the Industrial Revolution, Daddy stayed home. Daddy worked from home. This is a historical thing, you can research it. We had never had a world where, in the morning, Daddy got up and went away to a job and stayed gone all day, and then came back at the end of the day, leaving the mother and the children by themselves all day at home. This was a big thing, the Industrial Revolution. And in some cases, depending upon the job, Daddy might have to go away for a week or even a month because the work site was far away. So they'd have to take him there, work him for, you know, a week, a month, whatever, and then bring him back home for a little R&R, and take him back out. It changed the dynamic of the nuclear family because prior to the Industrial Revolution, the father is equally responsible for raising the children as the mother. It was a partnership. That whole thing got hijacked. Some people say it doesn't matter how little time you spend with your children as long as it's quality time. But the logic of that concept seems suspect. Why do we have to choose between the virtues of quantity versus quality? We don't accept that forced choice in any other area of our lives, so why is it only relevant to our children? We could illustrate it this way. Suppose you're looking forward all day to eating at one of the finest restaurants in town. The waiter brings you a menu, and you order the most expensive steak in the house. But when the meal arrives, you see a tiny piece of meat about the size of a 50-cent piece in the center of the plate. When you complain about the size, the waiter says, "I recognize that the portion is small, but it is the finest grain-fed beef money can buy. You'll never find a better bite of steak than what we have served you tonight. As to the portion, I hope you understand that it's not the quantity that matters, it's the quality." You would probably object, right? And for good reason. Because both quantity and quality are important in many areas of our life, including how we relate to our children. They need our time and the best we have to give them. The truth is, the quantity versus quality argument might be a poorly disguised rationalization for giving our children neither. So when it comes to giving them time and attention, they deserve the best in both quantity and quality. And that goes not only for your children, but for your spouse as well. And that's our good word for the day. Hope you have a great weekend. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, There is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.